Your bank could freeze your account tomorrow and you wouldn't see it coming. Right now, across the country, thousands of people are waking up to find their accounts locked, their money inaccessible, and no clear explanation why. This isn't some conspiracy theory. This is happening to regular people just like you, and the reasons behind it are more disturbing than you think. What I'm about to reveal will change how you think about your money forever. In the next few minutes, you're going to discover why banks are quietly closing accounts at record rates, what triggers these closures, and most importantly, how to protect yourself before it's too late. Because here's what nobody's telling you: the system you trust with your life savings has a dark side that most people never see until it's too late. Let me explain exactly what's going on. Banks have always had the power to close accounts, but something has changed dramatically in recent years. The rate of sudden account closures has skyrocketed, and it's not just affecting criminals or people doing shady business. It's happening to teachers, nurses, small business owners, and everyday families who thought they were doing everything right. So, what's really driving this wave of closures? The answer lies in three major forces that have converged to create a perfect storm. First, there's the massive increase in regulatory pressure. After the financial crisis and various money laundering scandals, governments around the world have imposed strict rules on banks. These regulations force banks to monitor every transaction, every deposit, every withdrawal. They're looking for patterns that might indicate illegal activity, money laundering, or fraud. Sounds reasonable, right? But here's the problem: the systems banks use to detect suspicious activity are largely automated. They're run by algorithms that flag accounts based on certain behaviors. And these algorithms don't understand context. They don't know that you just sold your car and deposited $5,000 in cash. They don't care that you're paying your contractor in multiple payments because that's how the contract was structured. All they see is a pattern that looks suspicious, and boom, your account gets flagged. Second, banks are terrified of being fined. Regulatory penalties for failing to catch money laundering or terrorist financing can run into billions of dollars. Yes, billions. So banks have adopted a policy that insiders call de risking. Essentially, if your account looks even slightly risky, they'd rather just close it than take the chance of being fined. It's easier for them to cut you loose than to investigate whether you're actually doing anything wrong. Think about that for a second. Your bank would rather destroy your financial life than spend time figuring out if you're innocent. Third, there's the rise of what's called Operation Choke Point style tactics. This refers to pressure on banks to cut off services to entire industries that someone in power doesn't like. It started with things like payday lenders and gun shops, but it's expanded far beyond that. Cryptocurrency users, cannabis businesses in states where it's legal, online content creators, political activists, and even people who travel frequently to certain countries have all found themselves suddenly unbanked. Now, let's talk about what actually triggers these closures, because this is where it gets really concerning. You might think you need to do something obviously wrong to get your account closed, but that's not true at all. Here are some completely legal activities that can get you flagged: making frequent cash deposits or withdrawals. If you run a cash based business like a food truck or a cleaning service, you're automatically suspicious in the eyes of the algorithm. Receiving multiple transfers from different people. If you're splitting bills with roommates, collecting money for a group gift, or running a small side business, this can trigger alerts. Sending money internationally, especially to certain countries. Have family abroad? That's a red flag. Suddenly depositing or withdrawing large amounts. Even if it's your own money from selling a vehicle or receiving an inheritance, it looks suspicious. Using peer to peer payment apps frequently. Venmo, Cash App, Zelle transfers can all trigger reviews. Having transactions that don't match your stated income or employment. Change jobs, started a side hustle. The bank's records might not match your new reality. Even something as simple as traveling abroad and using your card in multiple countries can trigger a freeze. I've heard from people who had their accounts locked while on vacation, unable to access their money in a foreign country. Imagine that nightmare. But here's where it gets even worse. When a bank decides to close your account, they often don't have to tell you why. They'll send you a vague letter saying they're exercising their right to terminate the relationship. No explanation, no appeal process, no chance to fix whatever they think is wrong. And once one bank closes your account, it gets reported to a database called check systems or early warning services. Other banks check these databases when you try to open new accounts. So, getting closed out of one bank can make it nearly impossible to open an account anywhere else. You become effectively unbanked, unable to participate in the modern economy. No direct deposit for your paycheck, no way to pay bills online, no debit card. You're forced back into a cash only existence, which ironically makes you look even more suspicious. So, what can you do to protect yourself? First, understand that your relationship with your bank is not as secure as you think. Don't keep all your money in one institution. Spread your funds across multiple banks. If one closes your account, you'll still have access to money while you sort things out. Second, document everything. Keep records of large transactions, especially cash deposits. Save receipts, contracts, and any paperwork that explains where your money comes from and where it's going. If your account gets flagged, this documentation can help you prove you're not doing anything wrong. Third, avoid patterns that look suspicious even if they're completely innocent. Instead of depositing cash frequently, try to batch your deposits. Use checks or electronic transfers when possible. Keep your financial activity consistent and predictable. Fourth, communicate with your bank before making unusual transactions. If you're about to receive a large insurance payout or sell a property, call your bank and let them know. This can prevent automatic flags. Fifth, regularly check your check systems and early warning services reports. You're entitled to free reports from these agencies. Make sure there are no errors that could prevent you from opening accounts in the future. Sixth, consider credit unions or smaller community banks. They often have more flexibility and human oversight compared to large national banks that rely heavily on automated systems. Seventh, never ignore communications from your bank. If they send you a letter asking for information or documentation, respond immediately. Ignoring these requests is the fastest way to get your account closed. But here's the bigger picture we need to talk about. This isn't just about individual inconvenience. This is about a fundamental shift in how the financial system works. We're moving toward a world where banks act as gatekeepers, deciding who gets to participate in the economy and who doesn't. And they're making these decisions based on automated systems and fear of regulatory penalties, not on whether you're actually doing anything wrong. The scary part is that there's very little oversight of this process. Banks have enormous power to cut people off from the financial system, and there's almost no accountability. You have very few rights when it comes to keeping your bank account open. This should concern everyone, regardless of your political views or what kind of business you run, because today it might be cryptocurrency users or cannabis businesses, but tomorrow it could be anyone. The criteria for what's considered risky can change at any time. Some experts warn we're heading toward a social credit system where your financial access depends on whether your behavior aligns with whatever the current priorities are. Others argue that banks are just trying to comply with reasonable regulations and protect themselves from being used for illegal purposes. But regardless of the intentions, the result is the same. Ordinary people are losing access to banking services without due process, without clear explanations, and without effective ways to appeal. So, what's the solution? We need better regulations that protect consumers, not just banks. There should be clear standards for when an account can be closed, requirements for explanation, and real appeal processes. There should be limits on how long you can be blacklisted from the banking system, and there should be consequences for banks that close accounts without proper justification. We also need more competition in the banking sector. When a handful of giant banks control most of the market, they have too much power. More options mean less chance of being completely shut out of the system. Technology might provide some answers too. Decentralized financial systems and digital currencies could offer alternatives that don't rely on traditional banks, though these come with their own risks and challenges. For now, the best thing you can do is stay informed. Protect yourself with the strategies I've outlined and pay attention to this issue because your financial freedom might depend on it. The power banks have to simply cut you off is growing, and most people have no idea until it happens to them. Don't let that be you. Take action now to protect your access to the financial system. Diversify where you keep your money, document your transactions, and stay aware of how you use your accounts. Your future financial security might depend on the steps you take today. If this opened your eyes to something you didn't know was happening, make sure you follow for more content that reveals what they don't want you to know about money, banking, and protecting your financial freedom.